Hello, everybody, and welcome back to another episode of the Small Town Housing Show. Soon to likely be renamed the PTBO Housing Show. Probably what it should have been named right from the start. But the intention or the thought was that we knew we wanted to have discussions with a broader view on land use planning outside of just Peterborough, because a lot of the issues we have are Ontario-wide, and a lot of the issues that we talk about on the macroeconomic side are provincial and federal, and we're looking at them uniquely from the perspective of Peterborough, which is a mid-sized town surrounded by a lot of small-sized towns, and so we're talking about it specifically our view from the many small towns that surround Peterborough and the mid-sized town that Peterborough is. Nonetheless, we are probably going to switch the show to the PTBO Housing Show for anybody who's tuning in and finding us on the podcast applications. But in regards to this week's show, episode 10, I believe we were on, we're going to have a good one. For anybody who tuned in last week, we had the long format interview with Michelle Ferrari. So this week is our more market update based video where we're focusing a bit more on the statistics and what's happening on the last couple of weeks in the real estate markets. And I think we got a great show. I am going to focus the core of this show on an article that many people have brought to my attention in the last week that has stated that Peterborough might possibly be the most overvalued real estate market in all of Canada. I don't necessarily believe that to be true, so we're going to go ahead and dissect some of the arguments and the points in the article, some of what I believe to be misinterpreted definitions, and some real faulty prop-up points in the argument leading towards that conclusion. So we're going to dive into that, and then we're going to go through a bit of our regular 7-day update and the Toronto Market Watch, the sentiment update, and then we'll do a wrap. So let's jump right into it. This article has gone far and wide. So there is a ratings company named Moody's Analytics. Now, Moody's has been around for forever. For anybody who's a Warren Buffett fan, he was notorious for going through and reading all of the Moody's manuals, which it had stock company ratings and valuations in them, and this is a part of how he did a lot of his value investing back in his early investing career. Moody's is not new, but they're not uniquely Canadian, and they're not uniquely real estate focused. They're just an analytics and a sort of a credit rating agency. So the root article or the root information that is leading towards this statement that Peterborough might possibly be the most overvalued city real estate wise in all of Canada is coming from Moody's, and then it was disseminated or it was sort of refiltered through many other media outlets. The first of which I can see was a blog post that has a particular real estate focus by the name of Better Dwelling. And Better Dwelling is a good one to follow. They have lots of relevant topics and trends on there on a regular basis. Stephen, I don't want to mispronounce his last name because I don't have it in front of me. It's something along the lines of Pawanzi, and I know I botched there, so I'm sorry, Steven. I'm a fan of your work. I read the stuff regularly, but Steve's very active on Twitter. For anybody who's on Twitter, you can get pretty close to his thoughts there, because he posts things that are beyond just real estate in regards to his Twitter feed. But he's constantly tracking and following the real estate market here in Canada with his Better Dwelling website and blog. And he, as far as I can see, was the first one who really sort of splashed this out there about the overvalued real estate in Canada at large. And it just so happened that in Q4 of Moody's ratings, Peterborough was deemed to be what they had as the most overvalued. Now, I will say that the way that the article was repurposed, or the way that that information, the core information that came from Moody's, and the way that it got cycled through Better Dwelling, and the way that it consequently got interpreted and splashed out through the Peterborough Examiner, Peterborough This Week, after Global News, it was all over the place. There's definitely some issues and some cracks in the core arguments there. So let's dive into a few of those. I'm going to flip open my laptop here, and I am going to post a few of these shots as some B-roll as we read through. So here's from the Peterborough Examiner. This is the headline that everybody was calling about. I had people asking me. I had aunts, uncles, everybody. Have you heard this? So here's the headline. Peterborough real estate called most overvalued in Canada. Subtitle says blind bidding, investors fueling rising prices, says housing expert. Now I will there's also needs to be an asterisk on that last point about the housing expert. We'll get into that a little bit further as we go here. Okay, so second to that, below the headline, one of the first lines in the article here, Peterborough has a new title, Most Overvalued City for Housing. This came after Moody's Analytics released its Q4 2021 assessment of housing price valuations. Peterborough took the top spot as the city with the most overvalued housing market in Southern Ontario, coming in at 107.8% overvalue, just ahead of St. Catharines, Niagara area at 106.9%. So first off, what I'm going to say is, as this article carried on, they did not spend a fragment of a second assessing how the judgment of the 107% overvaluation came to be concluded upon. So they just start by saying that it's overvalued by 107%. No supporting arguments to explain, okay, was this based on incomes versus price? Is this based on future growth projections? What is this based on? It doesn't even touch on that. And then it just proceeds to dive into really weak supporting sort of not even sub-arguments, sub-topics to do with the hot real estate market. So they don't do anything to back up or define how did they come to the conclusion of 107% overvaluation. So that's why we are here to talk about it. So let's go back to the Better Dwelling article, because from there and within Moody's actual analytics or their assessments, there is a little bit more definition involved there. And this is one thing I tried to go back and in none of these did I see any of them take specific quotes or anything out of the Moody's article. A lot of the Moody's stuff is paid. It's not public. They make their money selling information and selling reports. So I honestly, it's questionable whether or not any of these local outlets actually purchased and read firsthand the Moody's report that they're citing. I think a lot of them are getting it secondhand, but maybe I'm wrong. I stand to be corrected there. But let's jump on to the Better Dwelling article there, because I don't want to skip too far ahead before we leave this point about the definition of how did they come to conclude that it's 107% overvalued. Okay, so the Better Dwelling article says Canadian real estate is significantly overvalued according to a giant institutional intelligence firm, Moody's Analytics. They released their Q4 2020 assessment of home price valuation. They found home prices have continued to rise above trend, indicating overvaluation. Cities are now up to 108% overvalued, a problem particularly bad in Southern Ontario. So as it goes, when you look through this now and we dive later into this article, they are defining, or they are supporting the overvaluation argument. This 107% or 108% number is coming off of rise above trend. Okay, rise above trend. So let's go one step further here. Let's click over to, this is going to be a screen share for anybody's on the podcast. I'm going to explain this for you the best that I can. But what I'm pulling up here is a chart that was part of this article, and I believe part of the Root original report. The deviation of real estate prices from the trend. Positive numbers indicate potential overvaluation, while negative indicate undervaluation. So simply they are showing a graphical chart of how much these cities are over trend growth. And Peterborough is number 1. Niagara is number 2. Windsor is number 3. Hamilton is number 4. London is number 5. Barrie is number 6. Brantford is number 7. Oshawa is number 8. Guelph is number 10. Kitchener is number 11. The first one that's out of province is Abbotsford in 12th. And then we go on to Kingston before we hit Toronto. Not far behind Toronto is Montreal, and still seated lower is Vancouver and then Victoria. Now, what's interesting about this is when you look at those top 10, beyond Peterborough, Niagara, Windsor, London, Barrie, what do they all have in common? They're all mid-sized cities in Ontario that saw massive price appreciation as a consequence of the COVID-19 GTA exodus and subsequent price booms perpetuated by record low interest rates for a prolonged period of time. So Peterborough is not unique. It is in the same situation as Niagara, Windsor, Hamilton, Barrie, all these ones. It just so happened to be deemed to be the most above trend, which there are several other factors that they never list that are qualitative here in terms of how Peterborough deviated so far from the trend. So I want to dive into a couple of these right now because this is really the crux of it, is that in terms of overvaluation, I would say nothing is overvalued if it can sustain. So what caused the prices to deviate so far from the trend? We hit on a couple of them already, but mainly to speak as briefly as possible, GTA exodus due to mobile work, work from home status. Also, GTA exodus due to the demographics of the baby boomer cohort, basically who were bound to leave the city at some point in time, who then made their decision, okay, now's my time. The city's locked down. I'm finally downsizing, leaving my detached GTA home that I have lived in, or even high-end condo that I've lived in for a decade plus and that I've made an absolute fortune on. And I'm moving to somewhere with more accessible healthcare, with a more walkable city, less noise, less hustle and bustle, less traffic, and I am going to somewhere to retire. So I believe it's plausible that COVID pulled ahead a lot of moves that were going to be made already from boomers that were going to leave the city and go for somewhere with a bit of a slower pace. And it just got pushed ahead due to COVID and the city being locked down. So a lot of these cities are falling into this category. Now, Peterborough is particularly well suited to benefit from all of these factors because we have a regional hospital. We have a ton of golf courses. We have a great entertainment district. We are surrounded by the lakes. We have great parks. All things which are not bound to change. So where I want to loop back to is that, yes, work from home statuses are potentially on the change in terms of how many of them, how many people are going to have prolonged work from home with GTA jobs that have above standard incomes for Peterborough. We're already seeing some of those go back to a hybrid schedule, 3 days a week. And a lot of those people are still choosing to move to outside cities because the trade-off now, albeit it is shifting a little bit with the price of gas, the trade-off between the price of real estate and the cost of commuting still makes it worth people who are only going a few days a week back to the city to live somewhere out, not particularly Peterborough, but just anywhere outside of the GTA circle. So you have Peterborough and Niagara, fantastic retirement towns. Baby boomers do not love living in the hustle and bustle of Toronto, generally speaking. It's a young person's, the urban, mega centers are a young generation's place to thrive, grow, and be. And I think that it was a matter of time before a lot of these retirees started to move out of the city. We know that COVID likely sped that up. Now, the question I would ask is, if you're about to talk about overvaluation because of deviation from a trend, if we had a trend and then it sped up, the question is, will the factors that cause that speed up or deviation from the trend cease, or will they persist? And arguably, work from home, mobile work is changing, but some version of it is here to stay. We're 2 years beyond the start of the pandemic and ongoing. We're still having people move. We're helping people on an ongoing basis relocate from the GTA to live in Peterborough, and their jobs are based out of Toronto, but they're moving here and they're working on Zoom and they're working on their platforms, on their computers, and they're doing their job. And then ongoing, we have retirees from the baby boomer cohort that are now in their late 50s, early to mid 60s, and they are moving from Pickering, Ajax, even Oshawa, and then downtown Toronto. They have liquidated there. They want to go somewhere a bit slower, and they have great budgets to move to Peterborough. Our real estate is still extremely affordable for them, even after we have been deemed the most overvalued city in all of Canada. So my question is, will that change? What's going to stop? Is because the GTA is reopened now, is the demographic trend of baby boomers moving out of the city, moving to places with more accessible hospitals, moving to places with easier navigation, more walkability, is that going to stop? I don't think it's going to stop. I think that as long as baby boomers as a demographic are moving through the pipelines, we're going to see a continued dispersal of that particular group from the downtown core into the peripheral. Okay, so I think that is enough on that topic. You guys totally grabbed my rift on that, and I want to move on to some further points that were made in the article about the overvaluation here. So I'm going to read right out of the article from the Examiner. Overvaluation in Peterborough can be attributed to. So here's their sort of offshoot attributing factors. Overvaluation in Peterborough can be attributed to the rise in the housing market, to the rise in housing market investors, the number of which has doubled in the last couple of years. Now, that's anecdotal. There's no way to concretely confirm that. At least that I'm aware of. I don't think anybody's got hard data on that. I guess they could show whether or not people move in or through the mortgage issuances. I know myself have talked a lot about that. But definitely the amount of investors has gone up. I wouldn't be surprising if it was doubling. But I don't think we have any concrete information on that. Nonetheless, carrying on. In 2021, material suggests investors in the market were twice the number seen in 2020, said Paul Armstrong, author of the Housing is Fundamental report. Who they've deemed to be the resident housing expert here is Paul, who I believe is a member or a volunteer with the United Way. Further to that, investment in the market does not include people who buy the house to live in. We're talking about investors looking at real estate as a commodity. Armstrong said there are many contributing factors, but the one impacting overvaluation of housing, especially in Peterborough area, are real estate investment trusts. So REITs for short, for anybody who's familiar with the terminology. Large real estate investment funds attract money from investors, usually conservative investors. So I don't know if that's if he's talking about sort of political conservatives there. Or conservative in terms of the way that they manage their money, but next sentence reads, they do not want to invest in anything too risky, said Armstrong. Now, I would argue that investing in the most overvalued city in the world might be considered risky if you deemed it to be so. But apparently, these REITs with massive intelligence and insight and access to reporting and economic data and models do not, if they're investing here, clearly they don't deem it to be as overvalued as some think. But nonetheless, carrying on, the money goes into real estate investment trusts. So anybody who's buying units in real estate investment trusts is an investor. They are the ones driving up the market. I'm just going to say we're extremely active in this market. Myself as an agent, our real estate team, the KAMAR Cleary team, Century 21 as a brokerage, very close friends with a lot of the agents in the broker. Over 100 agents in this brokerage, and I gotta say, of all the transactions we've done in the last couple of years, and being on the sell side, seeing 20 offers coming in. I think I can count on less than one hand the amount of REITs that I've seen cycling around in the waters. So no doubt REITs exist and they are looking to buy. But I think that the problem is that the individual being quoted here isn't boots on the ground on a weekly basis. They're sort of regurgitating some hearsay information. So there's been a few articles, big splashy ones, about REITs looking to buy X amount of homes in Peterborough, one of their targeted areas. But maybe I stand to be corrected. But I do not think that REITs represent a significant buying portion of the detached real estate in Peterborough. What we are seeing is individuals who had access to record amounts of borrowing power via extremely low interest rates. We have a large amount of pressure via the GTA migration, the GTA exodus, and we have an extremely inelastic supply of new housing that cannot rise to meet demand. So questions I have specifically to combat this piece of the article is, okay, if we're talking about Peterborough being the most overvalued city in Canada, if the driving factor is investors and REITs, why have these factors not affected the market at large? Why have they specifically targeted Peterborough and chose to drive it up? It doesn't make any sense. If you guys see where I'm going with this, is okay. So if REITs are a factor, why are they not a factor in Oshawa? Why are they not a factor in Abbotsford? Why are they not a factor in New Brunswick? Do you know what I mean? The REITs exist and they analyze opportunities nationwide. Some of the REITs have specific mandates, or their portfolio, their holdings they have sort of core. There's ones that specialize in commercial. There's ones that they niche down into such specific things as long-term growth, land outside of cities. Some of them focus on B Street commercial real estate. These niches really focus in, and REITs just aren't generally out there to bid up anything and anything they see. They invest with intention. And my question to pose to how REITs have driven up the market and how that relates specifically to Peterborough being the most overvalued is, if REITs are the driving force, why haven't they driven up all markets equally? So I don't think that it holds any water in this specific case about why Peterborough is so high. So I'm going to move on to the next section here. What I have here is a chart. It's a graph of M2 money supply. So basically, we have undergone a massive, people can talk about, you can debate all day long about if you can classify quantitative easing, government bond buying as printing money. There's a lot of you can get into the weeds on what you define as printing money. And when you look at deviations from the trend, we're going to talk about deviations from the trend. If you're watching on YouTube, I'm going to post this chart up here. You want to see a deviation from the trend. If Moody's defines its overvaluation metric as deviation from the trend, you want to see a deviation from the trend. Go back to M2, money supply in the economy, and look at it from 2013 right up to 2020. Nice smooth line, moves very, it's almost straight. And then from 2020 on, the start of the pandemic, boom, look at the amount of money in the economy. Government grants, CERB, quantitative easing, the government budget expansion for all types of programs, government bond buying, and the record low interest rates and the absolute boom in residential lending and refinancing. So what else has deviated from the trend along with real estate prices, not only in Peterborough, but throughout all of those other towns that we talked about in Ontario and cities, is the amount of money in the economy. So you can look at this from one of a couple ways. Has the price of Canadian real estate, not just to mention Peterborough, shot up through the roof, or has the value of the Canadian dollar simply dropped because there is so many dollars circulating in the economy? And I just think that I'm going to leave that one with you, but I'm going to post this graph, because if what we're talking about is deviation from the trend, another thing that has deviated from the trend along with real estate prices is the amount of money in the Canadian economy, the amount of Canadian dollars that are circulating. Okay. And that is the last point that I have on that. I think that was an extremely long section on that, but my conclusion is that I don't think that there is any proof in the fact that we have deviated from our price trends prior over the last 2 years. How much we did is that there is any value in splashing around the headline that Peterborough is the most overvalued city in Canada. I think that those who regurgitate that without understanding what has caused Peterborough to move in price more than some other cities over the last 2 years don't understand the underlying factors, which we spoke about prior. And I think a lot of those factors are set to persist, which means that the deviation can remain, which means that it is not set to move. And also, now I will say, as we shoot this, because we're going on the second part of the show here about what's happening in Ontario, and prices are in a free fall throughout all of Ontario right now. So one thing I want to talk about is, okay, 108% overvaluation, even in the depths of the subprime crisis. In 2007, 2008, some of the worst hit markets, Detroit, people packed up and left. The auto industry basically collapsed, and there was entire streets, there was entire towns that were ghost towns. Some of these homes got taken over. They let entire blocks of homes go in and be spray painted by artists because it helped take a little bit of the criminal activity out of the neighborhoods. Just letting them do graffiti and dramatic art on the outside of the homes. These markets I remember people joking. You watch a documentary, a beautiful one by Johnny Knoxville about Detroit during the pandemic, and they said even the seagulls, even the raccoons left. Okay, and these markets barely cracked over. Some of them, like the records in the price drops, you're talking high 40s to 50% on the most massive recent correction of prices. When in the run up to that thing, you had people whose career was a strawberry picker, a fruit picker on a temporary work visa, getting mortgages for $700,000 homes. I mean, that's a bubble, guys. That's a bubble. And talking about prices there dropping 50% in the darkest days of things. So the 108%, to me, the problem is that indicates that things could drop 108%. If it's overvalued, then if it were to revert to the mean, then it could drop 108%. I think that is so far out of line. I think it's giving people a faulty notion about their confidence level that they should have about buying in Peterborough. And that's really my last word on it, is that it's not properly founded. And I think that when you look at Peterborough position to the GTA, still record prices throughout Ontario, we are still one of the most affordable places, relatively speaking, and especially when you stack up the amenities that we offer as a city. So that's enough of that. I'm sorry if I went over the top on that one, guys. The passionate point for me, I love our city, and I'm an ambassador of our city, and I think that hey, we're proud to represent, and I think that we're going to be going strong. And I think that as prices see a bit of a correction here across Ontario, I think that you're going to see that already right now some of the major GTA metros that they weren't deeming to be as overvalued as Peterborough are already falling much faster as things correct here. Okay, so let's move on to a couple of the last pieces of the show for anybody who tunes in and wants a bit more of these stats. The 7-day. 105 new listings, 67 sold. That leaves 38 net new listings in the last 7 days, pulling off the county statistics from PCAR. And that is relatively high versus everything we've been tracking this year, showing us the inventory is continuing to grow. 13 price changes, comparable with the last couple of weeks. We know that lots of houses are missing their offer dates, they're canceling and relisting higher, or we're seeing price drops on stuff that's sticking around. Average price, $729,000. That's down. Last month's numbers were over 800,000, so we're looking at approximately 9% price drop on the average price. If we go on the median price, which a lot of these stats off of House Sigma have been showing in their most recent report, lots of municipalities, lots of cities throughout Ontario are showing price drops in the last, when you spanning back, but whether you look at it from a month or 2 months back, we're seeing double digits across the board. We're seeing 10, 15, some markets even 20% price decreases when you're looking at median prices. Sales, total number of sales down 33% year over year. We really had a crazy year last year, so that's not a total surprise, especially with interest rates on the rise. And I will say to everybody out there, to show the average price, of course you can't draw a trend in a 1 month of data. But to say we're down 9% right now, guys, that rings true with everything that we're seeing out there. Consistently seeing comparables on a comparable to comparable basis. I'm seeing things consistently 10 to 15% less than they were a month and a half ago. So on a $700,000 listing, we're talking things being $70,000, $90,000, $100,000 less this month. $1 million listings, seeing them $100K less or more inside of like a month and a half. So it's getting really crazy out there how quick things are moving. On to the macro talk. We're hearing ongoing murmurs that another 0.5 point interest rate hike coming up at the next Bank of Canada meeting, possibly even more, and then they're still signaling further raises outside of that, beyond that. So cheap money is over for the time being. That's an ongoing trend. So we are predicting that we could see continued price pressure here as the cost of money continues to goes up and people can leverage themselves less. Now, I will say that's going to hurt people in the most overpriced cities and the ones with the absolute highest price. Go on a mortgage app, figure out what $100,000 can get you in a mortgage, and look at what you can afford to buy in Toronto. As the interest rates continue to rise, I think that as much as people can say that Peterborough is overvalued, how is anyone going to afford to live in a detached home in Toronto? And then look at how our average prices are going to be affected versus those when you go ahead and crank up that interest rate on a $2 million mortgage versus an $800,000 mortgage for a home in Peterborough. And I think the argument is still simple to be made that we're not going to get as compressed as some of these real high-end markets around the GTA. Toronto Watch, like I said, 10 to 20% price moves in median prices from the middle of February to now. A lot of that data popping out on. I'll put a screen share up here, but guys, just go on housesigma.com. Go to their recent reports. Some really good stuff on there. Sentiment, of course, sellers are rushing to the gates. Buyers are hesitant. No doubt. Nobody knows exactly what's going to happen next year. This is one of the most volatile times that you could choose. So I'm gonna hold off on giving any specific advice for buyers and sellers here on this one. We're taking our time to really consult with our people that are on the inside working with us in terms of what they're trying to do right now, and we're picking our strategies based on what their needs and goals are, what their timelines are, what their risk tolerance is, what their amount of capital and their buffer is, and it's on a case by case basis more than ever because the volatility is massive. Nobody, not the smartest people in the world right now, can predict what's going to be happening a month from now with this stuff, whether we're going to see a plateau or whether we're going to keep dropping. So that's it. Thank you, everybody, for tuning in. Thank you for bearing with me throughout that ramble. I hope that I did a fair enough job in articulating those points. I hope everybody could follow along with me well enough in my statements there. And let me know what you think. Comments, questions, put them down below. I really appreciate everybody tuning in. I appreciate everybody coming to me to ask about that article, and I take it personally when I went to read through it and give you my thoughts. So there you have them. Stay tuned. With any luck, we're going to have an interview with Stephen Wright next week, who is the North End Ward Councillor, and he is also declaring that he is running for the mayor position in the fall. So anyhow, potential mayor candidate there, and we're going to talk real estate, Peterborough politics with Stephen. So keep an eye out for that next week. I hope everybody enjoyed the show, and we'll look forward to talking to you next week. Take care.